Hey, welcome back guys to a new video. Hope everyone is doing fine. We have a lot to talk about because we had a sudden pump yesterday that was a little bit surprising. All had to do with some news that came out. Usually I don't like news-driven charts, but this was 100% news-driven. So we're gonna look at that soon. You might be asking what was then the news. Well, that was because information has leaked out that Biden put out an executive order for cryptocurrencies. That doesn't mean like we're gonna crack down or all in on crypto, but it just said, heck, hey, we need to focus on this and research this and see and explore what we can do with this. And these are the 6 major points that are going to look at: consumer investor protection, financial stability, illicit activity, US competitiveness, thank you, on a global stage, financial inclusion, and responsible innovation. Funny thing is, it kind of leaked out through Yellen because she already had her answer ready, like formal in a letter, or I think, or an email. That accidentally leaked out on the internet and then was taken down very soon again. But some people were super fast and they had the data, and yeah, anyways, long story short, it was a positive note, a positive tone, and therefore the dance or the move towards cryptocurrencies from the United States government is positive, and therefore that fuels the pump that we have just seen. Okay, we are going to look at the pump later. I quickly want to show you guys something that we talked about yesterday. And that was that I said I want to show you a scenario how we can still be bullish and break down. Long story short, if we go back all the way here to the spring of 21 here in May, we're seeing that we have this level right here where my mouse is right now. We had 1 touch point, 2 touch points, 3 touch points before we went higher. Right now we kind of have the same. We have 1 touch point, 2 touch points, and we're actually still kind of missing the third. So although we might break down right now all the way back here and then pump up, we would still be in this broader bull market, broader bull market. Although we would dump down a lot, and then we're talking about approximately 17, 18, 19, 20% from here. Let's say 20%. So don't be fooled, it can still happen. Absolutely not a guarantee. The conditions now are a little bit different. We are not in a falling wedge as we are here. Yeah, we are completely a year further, so that doesn't mean that you can just copy paste what happened last year and say this is going to happen again. But I thought this is too interesting not to show you, so that's why. All right, let's quickly head over to what happened today. As you can already see, we are now here in on the daily chart, a big fat green candle up. It's a little bit stereotype of what we have seen so far. I mean, look at this, big red candle down, green candle up, one big red candle down here, very fat green candle up. Sorry, here's then another red candle down. So we have sometimes these days where we suddenly have 8, 9, 10% pumps or dumps, and I think it's not over yet. So yeah, let's see how it looks like right now. You could say, hey Ray, good news, we pumped out, or is this not a fake out? Well, I was thinking later on, maybe I didn't draw my lines correctly or 100% correctly, and I should do something a little bit more like this. Oh wait, let me move my screen here a little bit. A little bit more like this. You would have some more touch points, and then like this. Then you can see that you still have quite a lot of touch points from support and resistance coming in, and then you take this one too. Then we even would have a little bit of fuel left maybe before we are retesting down. So it isn't bad if the theory doesn't work out right away. Like we say, this white line was not the holy grail, was not like the thing that we need to look at. You know, sometimes if you see, hey, you know what, maybe I'm a little bit wrong, then we draw one. Exactly the same we did here. Look at this white and yellow line. Why did I do that? Because the one was presenting the 4-hourly and the other one was presenting the daily. I will go into details later. Matter of fact, actually let's do that now. So when we are looking at the 4-hourly, then we're seeing that we had here on the 4-hourly more, the price was breaking out and was going down, but on the daily, actually, then you would only look at the yellow line and not the white line. So therefore I sometimes use the daily and the 4-hourly combined to look at the correct support and resistances. You could actually also do the same here for the bottom of this chart. So again, here we're now on a 4-hourly, and then you could say, well, this actually maybe still has some room to the downside, but although on the daily this white line was correct, as you can see, it hits all the candles correctly, but then we have a few candles that are really wicking down. So just because we break it here, or maybe here in the future, who knows, don't right away go short and say that was it, lights out, bear market. Just remember on what kind of time frame you are, and based on what kind of time frame then you are making your conclusions or your trades. All right, then let's get a little bit more into the price section. Now we had the kind of the macro stuff. So we are pumping up, great. Where are we right now? Well, if we are looking at, that is the wrong way. That's also the wrong way. Sorry, what the hell am I doing? This one to here. So if we are looking at the current pump, then you could see that we are going now straight into the golden bucket. So it's the 0.65 to 61.8. So a little bit of a retracement or a breather would be fine. Like I said, we are close to this yellow line, as you can see here, this resistance line. So who knows, maybe there's a little bit more of a and then before we are retracing a little bit. Of course, then the question is, if we are retracing, are we then going down like this and retracing this line, or maybe even going a little bit further? Then we really need to hold this line that I draw earlier. Just took it off the screen, else it gets a little bit messy. Or if we are pumping, can we then hold this support, or maybe hold this support and then going higher? That will be interesting to see. Right now I'm staying careful. I am not going into a long. I also said it here. Why would you go into a long when you just pumped up 10-12%? So just be careful now with placing your longs. Would I also right away now go short? I want to see some more confirmation in the market. Not oversold on the RSI, no bullish of bears crossing on the MACD. So yes, technically there's still room to go. Also on the higher time frames, it looks good. We still have room to go on the daily here. The MACD is a little bit of a mess, to be honest. But yeah, there is still room to go. Of course, on the smaller time frames, we are a little bit overbought here. Not yet a bearish crossing. But just be careful, we could have one of these patterns and then, retrace again a little bit. But let's see how that turns out. But I want you to have this macro view in mind, where we have this this big line here and the resistance lines here, and we just moving between the lows here and the highs here. That is for me the most important, that you get that kind of stuff. Another thing that I want to show you that is in confluence here with the 61.8, actually, you know what, I'm going to zoom out a little bit further so I can draw it a little bit easier, is that if we're looking at trade volume, let me see, where is that bad boy? Here, I think I have to draw like this. Then you're seeing that the high volume node, we're just trading above. Nice to see that we broke it. And if we are trading underneath, so let's say we're cracking down, we're going underneath here, then you see that there's not a lot of volume here. So matter of fact, if we are getting this rejection right now at the golden pocket, we will break the high volume node, yeah, then we're easily going lower, and then we will probably reach the 39k to 38k level, because that's also where we have the high volume again. And as you can see there, the darker part is coming in, so there's then the oversold territory, and the highlighted part, this is the fair value, so that is where the market says that is where the price should be. Yeah, everything is getting a little bit more tighter as we are getting further into the triangle. So interesting to see where are we heading. I will stay very careful if I was you guys. If you're really seeing a reversal, maybe like a double top or something like a divergence or something, then you could place in the short, of course. Then keep your stop loss just above the top, because if we're really breaking through and making new highs, then you're being stopped out, and then I think this price has more fuel to go. So let's see how that turns out. Okay, quickly head over to ETH, because I'm already noticing that I'm talking a lot. Here we kind of have the same story what I wanted to show you with the daily and the 4-hourly candles. So here we have, of course, our resistance and our support. But if I would zoom in, you could say, hey Ray, actually I don't really like your support line here, because if we're looking in a more detailed time frame, then I'm seeing that we have support and resistance on different levels, although on the daily it was actually just a wick down, as you can see. But on the 4-hourly it's a little bit more safe. So if you are super bearish and you think we are going to $1 for BTC or whatever that might be, I'm not in that camp, but if you are, then of course you need to wait until not only this line broke, but also this line broke and really creating new lows, and then you go massively short, because then there is no floor anymore. On the upside, of course, the exact same story. We want to see this one now break. We have drawn this line already so long ago, 2780, 2785, and we had so many touch points with this level. See if I can go back. I have sometimes a little bit of a fight with the Wi-Fi here. As you can see here it was tremendous support. Here it was resistance. Here it was support after it broke through resistance and support, and now we are fighting again with this line. So yeah, we'll see what's gonna happen. Also here, I would not place a long right now. Let's this first play out. Maybe it goes back a little bit like this, or maybe even one level down. We have some sideways action. If this is pumping, hey dude, there will be another trade. Just be careful, because if you're now going long and you're like, damn, you know what, I'm gonna squeeze out the last few percentages. I'm going I know 40x long, and I will take this a little bit. If this also really reverses, then you have a big problem, and trust me, 2-3%, it's not a lot, but also especially after such a move like this, I would just be very careful. We're talking right now about a pump of, what is it, 11-12%. Yeah, so don't be also ashamed that you missed the move. By the way, when we're talking about this big move that happened, it happened my time at night. Was it 8 or 9 or something? It was 5 in the morning in Europe, so the only one who could have pumped up the price were maybe a handful of whales, New York time, who had a lot of money and thought, let's pump it, or Asia, because that was already awake and it was trading. And there's a lot of trading volume coming from China, Japan, Korea. So I'm not surprised that they had the major pump, or the biggest cause of this pump. Percentage wise. So yeah, don't bump yourself against the head like, oh man, I missed this move, because most people miss this move. All right, quickly let's see what I have for FIP retracements. Here we didn't we didn't reach the golden pocket yet. Of course still can, but we are kind of fighting with the 0.5, and of course this level, what I said, the 2780. On the volume notes, let's quickly check what we can find here. I think it would look a little bit different. Yeah, so we already crossed it. This one's also a little bit more ugly, as you can see. Really very spiky here, where BTC had also really areas where there was less volume, but this is just very spiky, a little bit ugly. And here the volume node, of course, is much lower, so that is great news. This also could be support, and would actually could perfectly coincide when we're going up here, that not only this white line is then the support, but also the high volume node. So perfect confluence. Let's see what happens. Be careful, like I said, if you miss the move, don't bump yourself against the head. There will be more moments and days where you do miss him. Last month I think I missed like 4 out of the 5 big moves. It was unbelievable because I was asleep, I was gone, I was doing something else. You know what, that sometimes happens. No worries, there will always be another trade. The markets are always here. For now, be careful. Like I said, there is not a lot of room up. If it happens, let it cool down. Use your FIBs, use your stop losses just below your entry. It's still a wiki market. Don't get super bullish just because we have a green day, because a lot of people got bullish along the way and a lot of people got stopped out and burned and liquidated. So be very careful. Once we are breaking all kinds of levels up, then I will also turn into super bull and I will let you guys know. Alright, that was it. Sorry for the long video. Please do me a favor, like, subscribe, share this video, leave me a comment. You can also follow me on Twitter and Instagram, links in the descriptions, or the other channel, the Ray Finance channel. Also links in the description. Thank you guys so much. I love you and see you in the next one. Bye bye.